Chapter 1. Introduction. The Myth of Fast Money. What if I told you that becoming wealthy in the stock market does not require daily trading, complicated indicators, or constant screen time? Today, we are exploring the story and mindset of Warren Buffett, an investor who built extraordinary wealth through patience, discipline, and long-term thinking. This is not just a story. This is a mindset shift. Chapter 2. Who is Warren Buffett? Warren Buffett was born in 1930 in the United States. From a very young age, he showed a strong interest in numbers and business. At just 11 years old, he bought his first stock. Today, he is the chairman and CEO of Berkshire Hathaway, one of the most successful investment companies in the world. His approach is known as long-term value investing. Warren Buffett is not a trader. He thinks like a business owner. Chapter 3. Buffett's Core Belief. One of Warren Buffett's most famous quotes is, "If you're not willing to own a stock for 10 years, don't even think about owning it for 10 minutes." This perfectly explains his philosophy. Buffett does not focus on stock prices. He focuses on business quality. Short-term market fluctuations do not distract him. Chapter 4. Rule number 1. Understand the business. Buffett only invests in businesses that are simple and easy to understand. He believes that if you cannot clearly explain how a company makes money, you should not invest in it. That is why companies like Coca-Cola, Apple, and American Express have been long-term holdings in his portfolio. He avoids complex and hype-driven investments. Chapter 5. Rule number 2. Moat, the competitive advantage. One of Buffett's most important concepts is the idea of a moat. A moat is a strong competitive advantage that protects a business from its competitors. This can include powerful brand recognition, loyal customers, high switching costs. The wider the moat, the stronger and safer the business. Chapter 6. Rule number 3. The power of compounding. Compounding is the true secret behind Warren Buffett's success. Small, consistent returns, when reinvested over a long period of time, can grow into massive wealth. Buffett once said, "My wealth has come from living in America, some lucky genes, and compound interest." Time is the most powerful tool an investor can have. Chapter 7. Rule number 4. Emotional control. When markets fall, most people panic. When markets rise, most people become greedy. Buffett does the opposite. He famously said, "Be fearful when others are greedy, and greedy when others are fearful." He does not follow the crowd. He follows logic and discipline. Chapter 8. Buffett versus traders. Most traders focus on short-term price movements, constant screen time, fast and emotional decisions. Buffett focuses on annual reports, business fundamentals, long-term vision. He did not try to time the market. He gave the market time. Chapter 9. Lessons for beginners. For beginners, Buffett's message is clear. You do not need to trade every day. You do not need complex indicators. What you truly need is patience, discipline, consistency. A simple strategy applied over a long period of time often beats complex strategies in the short term. Chapter 10. Final message: the Buffett mindset. Warren Buffett's success is not based on secrets or shortcuts. He avoids rushing decisions, ignores market hype, invests in businesses he understands. This mindset has allowed him to consistently outperform the market for decades. If you want to build long-term wealth and develop a strong investing mindset, this channel is for you. Subscribe to the channel Forex Trading Guide, like the video, and comment "long-term" below. In the next video, we will break down Warren Buffett's real portfolio strategy and how beginners can apply it today.